So don't forget to leave me a thumbs up for these little puppies. Tell me they're not cute. Say hi. Say hi. Oh. What's going on, guys? It's Investing Hustler here, and today we have lots of news in the cannabis sector. But before we get started, I want to ask you guys to give me a thumbs up, and don't forget to subscribe if you're not subscribed yet. Also, I want to take a look at Namaste real quick. So yesterday I made a video, and in the beginning of that video, I talked about Namaste for a bit. I said that they had a support line at around 90 cents, and we should keep an eye out on it to see if Namaste breaks that support line. So as you can see right here, I made two lines right here. So this line right here in the bottom is now acting as the resistance line. This line right here was the support line for Namaste. So I want to zoom in a little. Let's take a look at the 5-minute charts. So yesterday, as we could see, Namaste was hovering around the support line and right near the end of the day, dipped below that support line. And this morning, as we all know, Namaste had a huge crash. I saw this 80-cent line as the resistance line. We kind of seen it go over it for a second and then immediately decline from that resistance line. So what I'm expecting for Namaste in the future is when it does break this resistance line at 80 cents right here, I do expect Namaste to be bouncing up and down on that line. So this resistance line might turn into the new support, and its previous support line can turn into the resistance line. So we might see Namaste start bouncing between 80 to 90 cents. It all depends if Namaste breaks this resistance line right here. It kind of looked like it was about to do it at one point today and then immediately decline. And so tomorrow we're going to see, hopefully Namaste breaks that resistance line and that 80-cent resistance turns into the support and its previous 90-cent support turns into the resistance line. Once it, or if that 90 cents resistance line breaks again, hopefully that turns into its support. But yeah, that's it for Namaste. Let's move on to the news. There's lots of news. I'm just going to skim past everything right now. So today we actually started off the day very nicely and then immediately almost declined. We can look at Aurora Cannabis real quick. So yesterday I did make a video titled is Aurora Cannabis heading to $11? And today they did head to $11, but that lasted about, I don't even think it lasted 1 hour, or maybe it lasted half an hour. So in the morning, we immediately jumped past $11, pushing above 11.20. And then what happened was it started declining throughout the day. Now we're pretty much trading sideways at around between 10.50 to 10.70. We started off the day very hot, and then it looks like we're going to end the day red. It's right now 3:56 p.m. I'm probably going to release this video a little later tonight because I have a few things I have to do, and I'm releasing a video, or by now you probably already seen my video on Neo, so you guys could check that out if you missed it. And it's not just like that for Aurora. It seems like the whole sector started off like that. Even Aphria started off pretty good. Aphria started day green and slowly started declining. Aphria had a way bigger decline than Aurora Cannabis. But let's move on to the news. I'm just going to skim past this. So CushCo Holdings, Analysts, Ratings, and Target Price. So CushCo has been one of my favorite American pot companies, and I actually hold a pretty small position in them, but I've spoken about them a few times in my morning live stream, and I think CushCo is a fairly valued company right now. But let's get into this article. So CushCo has experienced an increase in number of analysts covering the stock over the past few months. Company, which is based in the United States, provides packaging solutions to cannabis-related businesses. The solutions include tubes, bottles, containers, and bags. I'm just going to go straight to the target price. So analyst recommendations in February, analyst consensus recommendation for CushCo Holdings was a buy. The overall recommendation month over month remained unchanged. However, one more analyst has initiated coverage on the stock since January. Among the 4 analysts, only one recommended a strong buy, while the remaining 3 recommended a buy on the stock. None of the analysts recommend a hold or a sell. So CushCo's new target price was $8.40. The consensus target price was 6% higher compared to the $7.90 in January. As of March 1st, the stock closed at $5.90, which would leave a 42% room for upside. And I'm going to move on to the next article. Why Aphria's new facilities are bad news for short sellers. So with the approval of new facilities, Aphria has now a total annualized capacity of 110 kilograms annually, which is huge compared to its peers Canopy Growth and Aurora Cannabis plus Hexo. In its second quarter, Aphria reported net sales of 21.7 million Canadian dollars compared to 81 million Canadian dollars in the corresponding quarter of 2017. The company posted sales growth of 154% and stated that the initial recreational cannabis sales had boosted its revenue in the second quarter. So why is this bad news for short sellers? The rule to not losing money in the market when you're shorting is to never short on a stock with potential to grow sales and earnings. While short sellers criticized Aphria's Latin American acquisition, they may have ignored Aphria's Canadian assets that fueled a recent rally in the stock. So this is good news for Aphria investors or shareholders, and this is bad news for short sellers. But unfortunately, Aphria did have a bad day today. They went down 2.84%. And let's move on to the next article, which is Aurora Cannabis is the perfect millennial momentum stock. So Aurora Cannabis is a perfect example of a momentum stock for the social media era. The Canadian cannabis stock swung strongly to the upside on Tuesday, gaining more than 10% on the day after being named a top pick by Cohen analyst Vivian Azer. However, the stock has moved by 5% or more to the up or downside 10 times so far in 2019, suggesting that violent moves to either side are not as peculiar as they might be for other stocks. Yet the moves are not always related to major tangible news, as the company's earnings releases dating back to May 2017 have not yet yielded a rise or fall in the share value eclipsing 5%. The headline swings on the stocks are far more closely related to its popularity among social media users. According to data compiled by Bloomberg, social media postings about Aurora Cannabis more than quadrupled in morning hours as the stock climbed over 10%. The best example of the wild swings in the stock, largely on rumors and social media popularity, is the rapid run ACB made through September and October 2018, as the idea that Coca-Cola could bid for the bud grower abounded. So according to Pew Research, millennials are far more liberal-minded on marijuana legalization than other populations, suggesting they are the most inclined to speculate on volatile cannabis stocks. Aurora could be the key beneficiary of this correlation, as it is also the most popular stock on the popular investing app Robinhood, a low-cost investing app that targets the same segment of the population. So while the company does have a great deal going for it, including a global footprint, large cultivation capabilities, and a dominant domestic market share, the stock implication seems to be significantly driven by social media rumor mill. And I, for one, know this is 100% true, because when I look at my videos, when I look at my views, my most viewed videos, if you look at my top 10 most viewed videos, 90% of them are about Aurora Cannabis. So whenever I make a video on Aurora Cannabis, I'll be surprised to see less than 1,000 views on those videos, because people just seem to love Aurora, and I don't blame them. So let's move on to the next one. And I'm just going to skim past this. 3 marijuana stocks to consider buying in March. So let's take a look at these 3 marijuana stocks. The first one is CushCo Holdings Inc. The second one is Organigram Holdings. And the third one is Charlotte Webb's Holding, ticker symbol CWBHF. So we already spoke about Kushco's Holding, and I gave you an analyst price target. I talk about Organigram almost every day on my morning live stream. I do think they're a little overbought right now, and I would wait for a correction before starting a position with them, but I do think they're fairly valued and they are profitable right now, which is a very good sign. And Charlotte's Web's a new company that I haven't really done any research in, but you guys could add that to your watch list. On to the last article, which is these 3 pot stocks have lost nearly 500 million combined in 2019. So ready or not, here comes the green rush. Following the end of 9 decades of recreational marijuana prohibition in 2018, Canada became the first industrialized country in the world and only the second overall, aside from Uruguay, to legalize adult use weed this past October. So investors flocked to marijuana's big 3. Its rapid change in sentiments and underlying law, along with monstrous sales projections that have investors piling into Canada's big 3 pot stocks, Aurora Cannabis, Canopy Growth, and Aphria. You'll note that by big 3, I'm not referring to their market caps, although Canopy Growth and Aurora Cannabis just happen to be respectively number 1 and 2 in size. Rather, I'm talking about Canada's projected top marijuana producers. So Aurora Cannabis, which had been forecasting 570,000 kilograms of peak output prior to ICC Labs acquisition in South America, should have a realistic shot at 700,000 kilos in peak annual output by 2021 or 2022. Meanwhile, Canopy Growth has been far more tight-lipped about its potential production. What we know is the company has more than 4.3 million square feet of licensed growing capacity spanning 10 sites, but it's aiming for 5.6 million square feet in the aggregate. Assuming an industry average yield of about 100 grams per square foot, Canopy Growth has a realistic shot at 500 kilos to 550,000 kilos in annual yield. And then there's Aphria, which according to management should hit 255 kilograms of peak production. Together, these major growers could account for between 1.4 million to 1.5 million kilos of peak production a year, which is more than the entire country of Canada will likely demand by 2021. Unfortunately, these companies together are also generating massive operating losses. Aurora Cannabis, which is 6 months into fiscal 2019, reported operating loss of 192.1 million Canadian in February. Canopy Growth, the largest pot stock by market cap, has lost 402.6 million on operating basis through the first 9 months of fiscal 2019. Aphria has racked up 31.9 million in operating losses through the first 6 months of fiscal 2019. Added up, that's $626.5 million in operating losses so far in 2019, or $471 million US of operating losses. At this pace, even the rapid sales growth, it's possible that Canada's biggest pot stocks may lose in excess of 700 million on the operating basis combined in fiscal 2019. So investors might be inclined to point to the most famous case of operating losses that were somewhat meaningless in the early going stages, which is Amazon.com. However, Amazon was building itself into a powerhouse in niches that simply didn't exist before. The cannabis industry has existed, at least illegally, for a long time, making the comparison that of an apple and an orange. Instead, investors should understand that Wall Street's patience with big losses will eventually grow thin, and that a show-me state of mind is bound to take over sooner rather than later. Aurora Cannabis, while purportedly on track to recurring positive EBITDA by the fourth quarter of its current fiscal year, is far from a meaningful profit anytime soon. The company's growth at any cost strategy has seen it acquire one company after another and dilute investors in the process. The wait for Canopy to turn a profit is probably going to be even longer. And then there's Aphria, which is still attempting to overcome a loss of shareholders' trust from early December with no major partner as of yet, and a similar share-based dilution problem with Aurora and Canopy. Meaningful per share profits could be a ways off. What do you guys think about that? These three companies combined, they're probably estimated to lose about $700 million in 2019. Obviously, it doesn't look good on paper, but this is an industry that's in its very early stages and it's slowly growing every year, getting better every year. These companies are increasing in sales every year, and their growing capacity has not even been maximized yet. Let me know what you guys think, but that's it for now, guys. If you guys enjoyed this video, don't forget to leave me a thumbs up, and if you're not subscribed, don't forget to hit that notification bell and smash that subscribe button, and I'll see you guys next time. Bye-bye.